Hello, my friends. If you've been shopping online or looking at homes, you're probably wondering, what can I afford? What's my maximum payment, purchase price? How do I figure out what my rate would be? And how do I use a mortgage calculator? So we're going to go through those really quickly today, but don't worry. This is part of the pre-approval process, is for me to determine all this and determine that you are actually approved for it. You won't have any problems, but I do like you to be a little bit self-sufficient. So we're going to go through this really quickly, give you some general guidelines that you can use as you go shopping. So the first thing we're going to do is just talk about the maximum mortgage payment. So how do we figure that out? So we look at the debt to income ratio, and there's two ratios we look at, the front end and the back end. The front end, you're just looking at your mortgage payment divided by your gross monthly income. Now, I will determine that number for you, help you figure that out. We can figure out if we can use overtime or use commissions or whatever. If you're self-employed, it's a little bit more complicated. For sure, I need to talk to you about it then, but it will give you at least a general outline. Now, the maximum that number can be, so your income divided by, your debt divided by your income, is between around 35 to 40%. Your back end, you take that same mortgage payment plus your other mortgage or monthly obligations. You put those together, divide by your gross monthly again, and that gives your back end. That's going to be somewhere between 44 to 50%. Now, if you're VA or FHA approved, then those numbers could be slightly higher, but you need to make sure that you can actually afford it. So let's go through a quick example. Say your gross monthly income is $6,000. You times that by 0.4, so 40%, your front end would be $2,400. Now, assuming you don't have a lot of other debts, and that's probably the maximum mortgage payment you have, but maybe you have some other additional ones, you could have around $600 maximum and still stay under that 50% and still be qualified. So you have a car payment or student loans, or you have some other debts like credit cards or something. Add all those monthly payments together. Now, if you had, like, say, a really big car payment of $800 or $900, that would take away from your buying power. So you would have less on the front end because it's taking some of that money away. So that gives you an idea of where it is. Now, once you have that, then you go to a mortgage calculator. A really great one is the New American Funding one. You just Google New American Funding Calculator, it'll come up. When you're looking at this, you can determine, okay, what can I afford? So you're saying, I need to have a monthly payment, say you want it to be $2,000. So then you're like, well, what does that mean? Well, that means maybe having a $275,000 house with a 10% down payment. Rate 6.5. We'll talk about rates a little bit more in just a second, but let's just pretend that's where it is. Make sure you pick if it's going to be conventional or FHA. I'll tell you which one that is. Your mortgage insurance, you go shopping for your mortgage insurance. And so if it's a single family home, it's going to be somewhere between 100 to 200, somewhere in that range. A lot of times I can see it less. You shop for that. So whatever that comes out is what it's going to be. Make sure you add your homeowner's insurance or homeowner's fees if they happen to have those, if they have HOA fees. Your property taxes, I put in 1.2%, but you can look online a lot of times and they'll tell you what that amount is. And then that's what calculates it out. Now, say you only have enough for your first time buyer and you only have enough for 3%. So now 3% is great because you're going to have less cash to close, but that's going to increase your mortgage payment. So now your mortgage payment is a couple $100 more from going from 10% to 3%. Or say, you know what, you can qualify for a $2,400 mortgage payment and you feel comfortable with that, then let's try $300 and see what that happens to be. So $300 mortgage or a purchase price with 3% down, that's giving you just over $2,460. So you might be able to squeeze that through. We'd have to see if that works with the ratios. It'd be pretty close, but depends on if you have any other debt. So that's how we kind of work that part out. That's how we reverse engineer it. Say, okay, I want my mortgage payment to be $1,200. Start plugging the numbers. See what it is. I want my mortgage payment to be $1,800. Plug in the numbers. Now, the last part of this is the rate. And this is a really tricky one to figure out. So I'm just going to give you a couple little tiny hints about this. When you look online, you just Google it. A lot of times people come up with things like wherever they're going and their advertised rates. They do not show all of the different reasons why rates are where they are. If they're using discount points, if there's other reasons for it, they just come up with these numbers. This is one that gets used all the time, and it shows this rate, whether it's accurate or not, who knows, because we don't know all the different factors of these people that are getting these rates or what they're using, if they're using all those things. I find that these numbers seem to be a little bit on the side of advertised and not accurate. I've also found that if you Google average mortgage rates, a lot of times you do get a little bit more of an accurate of what's actually happening out there. So in this case, look at the difference of 6.8 versus the 6.38. It makes a huge difference. So why is all this difference? We'll talk about that in other videos, but just so you know, there is a lot of differences when it comes to rates, and it's hard to get an accurate one. So come to me if you'd like to ask, and I will be happy to explain to you what your rate is or where we are with it. Just as a reminder, there's a lot of determining factors of what an accurate rate will be. There's 30 reasons why rates can be. Some are a little bit more weighted than others, but they all make a difference of what your rates are. So I hope this is helpful, and if you have other questions, like I said, come back to me. It's part of my job. Love it. I love doing math. I want to help you through it. I love helping you get to the finish line, and good luck out there with shopping, and we'll talk to you soon.